Hello, good morning, afternoon, and evening to our global audience. I'm Ryan Bowen, the head of sales here at Unit21, and I wanted to thank you all for joining today's webinar on how sponsor banks ignite the fintech revolution. We feel it's also important to share a quick disclaimer that we are collaborating with both NBKC and Piermont Bank, and that we'll be recording this event. Before we dive in, for folks less familiar with who we are, Unit21 is a set of no-code tools for risk and compliance teams focused on transaction monitoring, case management, and identity verification. We founded Unit21 back in December of 2018 and are fortunate to not only work with the industry-defining companies, those like Chime, Intuit, and Coinbase, but also a majority of US sponsor banks in their fintech brands to some capacity. Our position in the market gave us a unique perspective on this emerging ecosystem and the challenges and approaches different organizations are taking. Through these scores of conversations, we saw an amazing opportunity to create a platform where we could discuss this new world and exchange learnings and best practices. Today, we're very excited to interview two individuals leading the sponsor bank revolution for FinTechs around the world. Brian Fellows, the Director of Risk Management and Compliance Officer at NBKC, along with Rodrigo Suarez, the Head of Innovation at Piermont Bank. I'll let Brian and Rodrigo introduce themselves. Brian, please take it away.
Thanks, Ryan. Happy to be here. Thanks for the invitation. And Rodrigo, good to see you again. So I manage our risk management function at NBKC based in Kansas City, Missouri. We operate a number of different FinTech programs, mainly on the deposit side, checking, savings, debit card programs, and been with the bank for a little over 2 years now, and we're continuing to grow and expand our operations in that space. So excited for this opportunity. Rodrigo?
Thanks, Brian. I'm excited to be part of the conversation. So I run Piermont Bank's banking as a service and broader fintech and innovation banking business. And to provide a little bit of context on Piermont, we're a New York-based bank. We got our charter in 2019. So we like to say that we are a traditional bank, but in a way we also operate a little bit like a startup or a fintech. And our proposition is really about bridging the gap between those two worlds. So really excited to be here. Thanks again, Ryan, for having us, and looking forward to an exciting conversation.
Awesome. Yeah. Thank you both for taking the time to join us today and to share your knowledge with our listeners around the world. One last housekeeping item before we begin. We're really hoping for an involved discussion and want to ask everyone to submit any questions using the Q&A button at the bottom of the screen, or to send an email to Yash, that is YASH, at unit21.ai, and we'll get back to you shortly. And so without further ado, let's dive in. Our first question is really around the macro explanation of what the market is up to. And so, Brian, I'd love to start with yourself. And would you mind sharing your perspective on what is the paradigm shift from banks to fintechs?
Well, I mean, I think if you look back, probably 10 plus years ago even, I mean, I know in 2021, fintech still seems like it's an emerging area, which it certainly is. But, if the fintech space has been around for, like I said, 10 plus years, and if you look back at how it originally started, it kind of started as a service provider, right? ACH or peer-to-peer networks, that type of thing. But it's kind of evolved since then into the banking as a service, which Rodrigo, talked about as well, and what, NBKC's a part of in offering the sponsor bank model for deposits, checking, savings, debit card, but also in the lending space, where you have companies like SoFi, Lending Club, Lending Tree, those type of things that use another bank's charter to offer various products and services. I think the interesting thing in the fintech space is just the rapid acceleration and growth that we've seen. I think Unit21 shared a chart, I would say it's been a couple weeks ago now, on the number of fintechs that are out there. And even if you look at the difference between 2017 and 2021, the expansion in the number of providers that are out there it just continues to accelerate. And so I think you're kind of seeing a little bit of a shift from the service provider model to the banking as a service model, and a little bit more growth in that area.
Awesome. Awesome. Rodrigo, we'd love to hear your perspective as well.
Yeah, no, I think what Brian is saying is on point. We have seen fintech for a while now, but especially over the last year and through the pandemic, we have seen a very significant growth and a very significant rise in the adoption of digital across different customer segments. And on the fintech side, more and more fintechs launching new product and service propositions, both to address specific niche segments with existing, traditional like offerings, but also to develop new and innovative product propositions in partnership with banks. What I think has been a real shift, especially over the last year and a half, is moving from that initial banking as a service model that we have seen over the last 10 years, as Brian mentioned, to what we sometimes internally refer to as like banking as a service 2.0 or 3.0, where we're seeing banks collaborate and partner with fintechs in slightly different ways, with more collaboration, with the opportunity to not only service the behind the scenes player, but also really help those fintechs launch those new product propositions efficiently at speed and in a way where they can lean on the bank's expertise for product development, for risk management, for compliance. So that is really, I think, what's happening recently as it relates to banks working with fintechs. More and more of that happening and starting to happen in ways where, to some extent, it is somewhat commoditized, but at the same time, you're seeing true differentiators as far as how different banks approach this. Not all banks do it in the same way. Not all fintechs are looking for the same thing. So the model is evolving very rapidly as well. And it's an interesting shift to see and to be a part of.
Yeah, agreed. It has been a very exciting one. And largely as a consumer, I've very much enjoyed some of the innovative products coming out. It's been a great thing, I think, for folks across the board. And so thank you guys for that. Our next topic up is taking a little bit of a deeper dive. And so we're curious from the bank's perspective, why are banks interested in the sponsor model? And so Rodrigo, I'd love to start off with you on this one.
Yeah, so I think more than banks being interested in the sponsor model, and some of them are and have been for a while, for many it's now become more of an imperative to enter the space. If we think about where the industry will go in the next 10, 20 years, banks that are not participating in the banking as a service space or with a banking as a service type offering, may become obsolete, right? Like a lot of things can happen, but I think banks, including large and small, are realizing that the market is trending in that direction and that it's important for them to learn how to work with fintechs. Now, the flip side of that is that it's hard for banks to work with fintechs. Banks and fintechs have very different cultures. Banks, unfortunately, tend to be bureaucratic and move very slow as a rule, and fintechs, want to move very fast and operate on lean models. So for banks that I think find a way to work in mutually beneficial ways with fintechs, there will be very interesting growth opportunities. Brian talked a little bit about this, but on the deposit side, working with fintechs, banks can grow their deposits, diversify their deposits. But they can also drive payment volume and realize benefits on the non-interest income side. And on the fintech side, the benefits are also there. So, again, like I think for banks that figure out the way to work in a mutually beneficial way with fintechs, removing some friction that has existed maybe over the last few years, there are a lot of opportunities for growth, for profitability, and also to serve new and interesting segments that maybe are currently not served adequately with existing bank products.
It's awesome. Yeah, thank you for that. Brian, love your thoughts as well.
Yeah, I mean, I think Rodrigo did a pretty good summary of what why it's beneficial for a sponsor bank to get into this space. I think like what Rodrigo said, to a certain extent, you're somewhat forced to, because these are the new players in the market, and there's a certain level of keeping up with consumer demand on innovative products, services, etc. Um, the other thing that I would add to that is, from the bank side, it can accomplish a goal. I mean, or a strategic objective. If we sit there as a bank, at the board or senior management level and say our goal here is to increase, or we need to increase deposits, we can team up with a fintech to do that, using their distribution channel. Maybe that's in the credit space where we want to offer a special loan product to consumers. We could easily do that, and so maybe there's a fee or an income play there. So from the bank side, I think that number one, it's is there a strategic objective that we're trying to hit or trying to target, and then maybe we're not agile enough to do that on our own, and so that's where we would team up with a fintech to take that on. For MBKC specifically, I mean, we've been in the space for, let's call it 4 years now, in a variety of ways. And we're continuing to expand there. We hope to continue to expand there because we've found that it's, number one, viable, but number two, it checks some boxes strategically for our organization and what we're trying to accomplish long term. So, I think that that's where a bank that may not be in the space today, where I would recommend looking at first is, what are the strategic objectives of the bank, and can a fintech support that in some fashion or form?
Yeah, and just to add a little bit to what you just said, Brian, I think the again, like the flip side of that is also from the fintech's perspective, right? Like understanding why a bank is doing this, and how that aligns or does not align with what the fintech is doing and thinking about long term. I think that's also important. There are banks that are entering the space for different reasons, and sometimes that may be a good reason for a fintech to partner with that bank, or it may not be. So I think that's also important to think through.
That's excellent. And so there's an element of co-opetition, but a symbiotic relationship to be had, of course, maybe determined by several layers of complexity, cultural fits, objectives of both orgs, et cetera. But nonetheless, if you're able to find each other out in the market, there's a mutual and reciprocal good and benefit to be had kind of all around. So excellent. Yeah, thank you guys. I'd love to maybe take a look at the dark side of the coin. We've focused on some of the positives and some of from the consumer, the bank, and the fintech's perspectives. But there's also an element in the compliance realm where there's some increased risks. And so, Brian, I'd love to start with yourself on our next question and get your thoughts on some of the concerns and the cons to the market change.
Well, Rodrigo kind of mentioned it there just a second ago, which is there are strategic initiatives both of the bank and of the fintech. And I think entering into an agreement of sorts between the two parties, there is a level that you have to coexist and make sure that you're both striving towards the same goal. You can obviously have varying opinions or varying goals or initiatives outside, but the end goal has to be the same. And so I think that there is a level, from the sponsor bank side, there is a level of risk there in these type of arrangements. And it comes in all different forms, right? I mean, it could be a financial risk. Can the fintech support the operations? On the bank side, there may be an operational risk of, do we have the expertise or the support or the manpower to help the fintech grow? I think that that's another important element there. And then I think, there's obviously a compliance risk, whether it's fraud or AML related. Maybe it's a risk from a regulation or a law that the fintech is trying to figure out how they work within the parameters of what's given out there, which oftentimes in a law and regulation can be somewhat vague, if you will, or maybe changing. So I think that the concerns here are different in the strategic initiatives that the fintech and bank are working towards, and that's why I think that it's important for both parties to come together and figure out, is this a relationship that is going to last years and years to come? Because these things are not turnkey, right? I mean, a lot of this stuff, it's not like we just onboard a fintech program tomorrow or even in 30 days. I mean, a lot of times this takes many months to get a fintech onboarded and contractual arrangements figured out, as well as just the go-to-market strategy. So I think there's a little bit of a concern there of like rapid growth or expectations on one side or the other that something's going to happen quicker than the other side anticipates or expects it to happen. So from the sponsor bank side, that's really what we see today, is making sure that those two, both parties align in what our view and what our vision is.
Amazing. Excellent. Rodrigo, thoughts?
Yeah, no, I completely agree. I think alignment is critical from the early stages, and as a fintech scales. But I'll take a little bit of a step back and also answer that question from like a broader perspective. One of the concerns, at least coming from like the bank side, that I have when I look at the broader space, is also seeing other players, API providers, launch new propositions where the value is sometimes described as like abstracting away the bank layer and having the fintech only interact with that banking as a service provider, which will sort of like handle the bank relationship on the background. I think that, to me at least, that's concerning for a number of reasons, right? I think as a fintech scales, especially, having a direct relationship with the bank is very important, and I know that's also what Brian and the NBKC team believe in and have been working on over the last few years. But I don't think all banks are approaching the space from that perspective, and there are some banks and some players where the model has been, the bank sits behind the scenes, and all of the interactions are handled through an intermediary of sorts. And when things get complicated, or when there's a question about how to navigate a specific regulation or law, or not how to navigate it, but how to address it, so that there are no issues, I think talking to a bank and leaning on a bank that has the compliance expertise and the risk management expertise is very important. So that would be my take on just looking at the market and where it's going. One area that I think fintechs and others should look at carefully and assess what's better and more productive and more efficient long term.
Excellent. Brian, do you have any additional thoughts maybe on the different flavors or strategies that banks are going to market with around this?
Well, I think we've definitely seen, many years ago, right, it was a lot of the bank is in the background. I think that that's somewhat transitioning the other side of the coin there, mainly because it's from a regulatory space. We're seeing a little bit different shift there, different expectations, or heightened expectations, I would say, from the sponsor bank. And so Rodrigo is right. We have seen that directly in the market today. Is does the bank understand what's going on at the fintech level or at the consumer level? So I do definitely echo that sentiment. From our standpoint, we like to be connected with our programs because, again, going back to my initial comment around the goals and the strategic initiatives, we on the bank side are trying to check some of those boxes as well and make sure that we're continuing to advance forward. And the only way that we can do that is to know what's happening on the ground level at the fintech. So that's one of the other reasons why we like to understand what's going on, as well as to provide the expertise that we can in various forms.
Amazing. And so the right partnerships for some folks might be, technology stack, just overall support and sponsorship, and then, some of that guidance as they mature. That's great stuff. Thank you, guys. Our next question is going to try and drill in a little bit more, getting closer and closer to the ground level. And so we'd love to hear specifically on these fintechs themselves and the partnerships once they get started, how these look. And so, Rodrigo, I'd love to start off with yourself. And the question's really around, what are some of the challenges you see with your early stage fintechs or your newest launches together?
Yeah, I think launching a new product is challenging in any industry. There are challenges around just building the right user experience, having the right go-to-market strategy. So as it relates to financial services, I think those challenges remain, but they are compounded by the complexity that a fintech faces when launching a financial services product, which is highly regulated. So what we tend to see is, at least initially, a lot of work that is required from our side, from the bank side, but also from the fintech side, to make sure that everything is structured in the right way, that we are, from a policy and procedure perspective, also understanding the right things as a bank, and being able to collaborate with the fintech where our input is required. And then, as that product is launched, I think there's also, a very important role for the bank to monitor that relationship and to be there to answer any questions that may come up. A lot of things that happen on the fintech side are constantly evolving. So, especially at first, being able to actually see what's happening, course correct when necessary, and making sure that the right overall compliance framework is in place is, a challenge, but also something very, very important in enabling the fintech to scale adequately later on. And I know Brian can speak a lot more to the compliance side than I can. But from like a broader business perspective, I think just, looking at all of the components that need to be in place, and tying those to the compliance and regulatory framework is a challenge and something important for early stage fintechs to think through.
Excellent. Yeah. Awesome. Brian?
Yeah, I mean, I would say one of the challenges, or a lot of the challenges we see with early stage startups, is just some of the more technical expertise, whether it's in the compliance realm, the financial realm, even just simple stuff like deposit operations or credit operations with, some of the, let's say it's credit underwriting questions, ACH transfers, peer-to-peer transfers, some of those back-end processes that, I mean, it sounds weird, NBKC's been doing this for 20 plus years, right? So we just kind of think of this stuff as, this is just day-to-day business. But on the fintech side, they don't necessarily have that level of expertise a lot of times. So I do think that going back to kind of what Rodrigo and I talked about earlier, which is selecting the right sponsor, the sponsor bank selecting the right fintech, it goes the other way around as well with the fintech, selecting the right sponsor bank, and vice versa, because a lot of times, I mean, maybe NBKC has a great expertise in one field, but maybe not something else. Whereas, Piermont may be really good in one area that NBKC is not as strong in. But a lot of that, I think, entry-level fintech or startup fintech phase, you get into some expertise or limited expertise areas where the sponsor bank has to be able to and willing to jump in and provide that expertise or feedback or commentary. Maybe it's monitoring and oversight. But I think that's where what Rodrigo was saying earlier with the shift of the banks just sitting in the background and letting the fintechs kind of do what they need to do. I think you're seeing a little bit of shift there as well, because these early stage startups don't necessarily want that. They do want a bank that can help provide that expertise and be on the forefront when there are questions, and be able to answer those questions quickly, timely, when they need help. So I think we see a lot of struggles, right? I mean, every new business has their own struggles. From our side, specifically on the compliance side, it's the expertise in laws, regulations, operations, financial components to that, and that's where we have to be able to jump in and make sure that we have the resources, the human resources, as well as expertise that we can provide to the fintech.
Yeah. And then is there, some sort of a normal time frame or pattern that you see folks kind of hit the rough patches and then maybe grow out to maybe smoother sailing or more polished processes?
You know, we've seen, I mean, we've kind of seen everything, right? I mean, we have some programs that they want to launch as quickly as possible, right? So they're just, out there developing and hitting the ground running really quickly. But we also have other programs that, they've done a lot of testing, focus groups. They understand what a consumer wants and what a consumer needs. Maybe they only launch with a couple hundred customers out of the gate, and they do that for 3 to 6 months to fine tune the product offering or the operational aspects of it. So, I mean, we've seen everything under the sun, and they all operate a little bit different, which is kind of the unique and interesting part of this space. Is you get that there's a little bit of an unknown there. But I think early on, a lot of programs will start and they're fine, first couple of months. And then I think when you get into that innovation conversation of, okay, we launch with our initial product offering, what's next on the roadmap, and having a very clear roadmap out there. And that's a lot of times where we have to jump in on the bank side and either provide expertise, direction, commentary, best practices maybe on some areas. And so I would say, generally speaking, 3 to 6 months after a launch, that's where we are kind of talking about, all right, what's phase, 1.1 or 2.0, like what's next on the horizon from the FinTechs viewpoint.
Yeah. Awesome. Very deep level of collaboration. I didn't know that it was that lockstep. Rodrigo, are you guys seeing something similar at Piermont? Love to ask you the same question.
Yeah, we're seeing something similar. The approach that we take is, going back to what we have been saying multiple times, to work closely with those fintechs and in a way to meet them where they are. As Brian said, fintechs can be very different from each other. There may be some that are able to get up and running very quickly, that lean on the bank for certain compliance questions, legal questions, and then evolve rapidly from there. And there are others that require a lot more support from the bank as well. Yeah, on our side, I think it varies, but as a general rule, what Brian is saying, is what we see as well. And once those fintechs are live, also having the ability to understand how their product is evolving and to intervene in the right way with that feedback, that sort of bank expertise to make sure that it's smoother sailing for them.
Yeah. Excellent. And so my big takeaways there, it's everyone's different. Sponsor bank policies, processes, fintechs, their demands, their growth patterns, their core competencies. So yeah, very great, multi-layered, very complex. It seems like personalization and really spending time to pick the right partners to have that flexibility and that collaboration would be a key factor. This is great. Thank you, guys. We've got one last set of questions here, or just question, and it's kind of the final step tangential to the above. And so, Brian, I'd love to start off with yourself. And the question here is, how do you help partners mitigate these challenges?
I think going back to the expertise and really just being a sponsor bank that's willing to provide that is what we have traditionally tried to provide, because there's benefits of doing that both for the fintech as well as for the bank. The bank obviously understands what's going on, what the risks are. We can adequately understand those risks and then mitigate them if there needs to be some mitigation. So I think that's where it really just comes to expertise. And on the fintech side, not being afraid to reach out and ask those questions, ask opinions, ask best practices of the sponsor bank, and then vice versa, the sponsor bank being able to, then provide a question and answer back to the fintech, and really not just sitting in the background and expecting the fintech just to kind of go, do whatever they feel is right. Because it does go both ways. There's benefits to that, but there's also some drawbacks, which is the bank loses line of sight to some of those ins and outs and the inner workings of what's going on at the fintech level, where maybe we could jump in ahead of time, provide that expertise, and then mitigate some of the risk on the back end by doing so.
Awesome. Rodrigo, how about yourselves at Piermont? What are some of the things that you yourselves are doing to address the challenges of these earlier stage companies?
Yeah, I mean, for us, it starts with how we internally operate. We work very closely. I work very closely with our chief risk officer, with our chief banking officer, with other executives at the bank, to make sure that our broader banking as a service initiative is operating in the right way, and that we have the right set of processes, monitoring, and other like oversight components in place. And from there, it's what Brian described. Like we are able to, both in conversations that we have with fintechs that we work with on an ongoing basis, and by looking at what the fintech is doing, we have the ability to step in at the right time with the right set of best practices, with the right feedback, to make sure that the fintech is doing things in a way that makes it easier for them and for us. And before sort of like getting to that stage, even in our onboarding process, and as we're standing up a program, looking at all those components and having very, very close interactions with each of those fintechs, is very important, and I think critical to address those challenges. If you're able to identify those early on, to get on the same page early on, it's a lot easier once the fintech is actually live and acquiring customers, to understand what should happen on both sides, and to take the necessary steps to overcome certain challenges that are in some cases inevitable, but that with the right partnership and the right level of communication can be addressed correctly.
Excellent. Yeah, well, thank you guys for those insights. We've got kind of that list of questions here prepared. We've also been accepting some from the audience. And so before we jump over to some of the audience generated questions, I would just look to take an attempt at summarizing just the wealth of knowledge that you guys have helped share. And so if I've got my own personal takeaways to try and walk away with and maybe share with the audience as cliff notes, an active partnership is really going to be one of the key elements of strengths. And that takes a bunch of different forms. It takes compliance and risk advice, both at establishment of partnerships, but for new product launches, through new hires, through new processes, new rules, things to look out for. Another big key learning that I've heard here is really that, this is a good model for everybody. There is a symbiotic relationship to be had. It just really depends on kind of the matchmaking that folks put together. And so from the banking side, I think there's kind of two camps. There's been a camp where I've seen folks very adverse to embracing this model and see it as competition and potential erosion. And then we've seen the other camp here where you really embrace the model. You see this as the tide of change and a symbiotic relationship where both boats can float. The last bit that I've got that I guess is no surprise, just knowing what I know here, is just how unique the fintechs are. They really do take many shapes and sizes, personalities, products, visions, growth patterns. And so that element is just such a key consideration for that active partnership in who you select. And that's just so great. I think that's an area where a lot of folks have been relatively confused on just how to approach or how to shop their partners, what criteria they're looking for, what variables. And I'm sure for yourselves, just being such a new space, have similar challenges, who's a good fit and why, and who are the best patterns. And so just super insightful, and thank you guys for that.
Yeah, no, thanks for having us.
Awesome. Well, some questions from the audience, and there's more streaming in. I'm going to grab our top three favorites over here by process of voting, and we'll see if we've got some time to squeeze in some more. And so the first one that we'd like to cover is, how do you balance the regulatory oversight needs of the banks with the fintech's need for innovation? And Rodrigo, why don't we start with yourself on this one?
Yeah, well, my own perspective around that and what we try to do at Piermont is to make sure that we're able to do things efficiently and move at the right speed. Banks tend to move slow precisely because they need to balance regulation with that need to innovate. And sometimes doing both is tough from a business model perspective. Uh, our approach has been to build out and design the right set of processes from the start, so that we can operate on the regulatory side efficiently. Of course, doing things responsibly and making sure that we address all regulatory requirements so that we can enable the fintech to innovate in the right way. Where there is a partnership between a bank and a fintech, where the fintech wants to launch a new product or just maybe change their UI in a very minor way, and the bank needs 3 or 4 months to approve that. I think that becomes a hindrance to innovate on the fintech side. So that's what I would say. We approach that in a very simple and straightforward manner, just enabling the fintech to do what they do best and being efficiently in the background as we address some of those things.
Excellent. Brian, would love your thoughts on this topic as well.
Yeah, I know there's a lot of questions out there, so I'll try to, and we can try to get to as many as possible. And I'll try to be brief, and we can expand on these later on in some FAQs that are sent out. But I think Rodrigo is right as far as the innovation and the need for speed, if you will. On the bank side, the best recommendation I can have in this space is to have a change management program or process, if you will, have lines of communication internally on what an approval process looks like. I know that's very cliche in the financial space on change management, but it really is true. I mean, what we find is if we have a good change management program and we have a good approval structure, it makes it much more streamlined on the back end. And I also think that from the bank side, we try to prioritize what are the requests that we can, rubber stamp, if you will. There's very little risk with changing a workflow or some sort of user interface, and we can get those approved very quickly. But then maybe there's some larger discussions on, very large projects and initiatives that require a little bit more due diligence or thought process internally. So I think that having that change management process, having it outlined, and then having passive communication internally on the bank side is super important, but also makes it easier from the fintech perspective because they will understand. Requests sometimes may take a while, but the bank should be able to provide like a level of transparency there on what's the level of risk or controls that are needed in some space.
Awesome. We have maybe what's potentially a quicker one, and I think, Brian, you had touched on it a little bit earlier, but the second most popular by vote question was really around just how long does it take to establish this partnership between a fintech and a sponsor bank?
Yeah, I mean, it really depends, right? Like I said before, it depends on the bank and it depends on the fintech. Some fintechs are strategically slow at launching, either just launching out of the gate or launching new products in like a 2.0 or a 3.0 environment. As far as a sponsor bank goes, it really depends on if you're in the space already and you have a playbook, if you will, on how to onboard a new program. And I think also understanding that each program is very, very unique and very different, but there is a level of expertise that we have because we've done it before. If you're a sponsor bank that's out there that hasn't been in the space before, I would ride the bicycle with some training wheels first, and pick a strategic partner. Take a lot of time to do your due diligence, understand what the risks are of the program or the service that you're offering, and then be able to go from there. So all inclusive, it really depends on the fintech, how quickly they want to move, and how diverse the product offering is. I would say typically, it's probably a 3 to 6 month endeavor from start to finish, and that's 3 months is moving pretty quickly though. But I would say generally that 3 to 6 month time period.
Awesome. Rodrigo, are you folks seeing roughly the same time frames at Piermont as well?
So we are building things to be able to onboard a fintech faster, and I think to Brian's point, it really depends on the fintech. It really depends on the program, and there are a number of things that play into timelines. We have been able, on the shorter end of the spectrum, to bring fintechs live in 6 to 8 weeks, which we think is pretty fast. But again, like going back to what Brian said, it can depend a lot on the fintech's readiness and the product maturity that they have, a number of other things. So yeah, anywhere from that time frame to like a little bit longer, I think, is what we're aiming at on our side.
Excellent. Awesome. And then one last pre-show question. I think we might have room for 2 more recent submissions. Is there any reason a sponsor bank would not be interested in a partnership? And Rodrigo, I'll kick things off with yourself.
Yeah, well, I mean, Brian mentioned this before, right? I think not all banks are going to be experts in all things, and not all banks are going to enable all products or all use cases. So that would be the primary reason. In our case, just as an example, we're not focused on doing consumer lending. So if a fintech is launching a consumer lending product and looking for the right bank partner to enable that, we're probably not the best option for them. Or on the flip side, if they're sort of like serving a segment or a use case that we, from a risk perspective, have not fully assessed and understand, then maybe there may not be a mutual fit there. Assuming those things are not obstacles, I think there are ways for a bank to partner with a fintech that has the right level of maturity, alignment on product, alignment on use case and segment, but sometimes that's not always there.
Awesome. Yeah, well, thank you guys for that. Some more recent questions from the audience. Improv 2 polling's happening here. Brian, this one's for yourself to start. How do you suggest building more trust between fintechs and their partner banks, specifically or especially around data privacy, data security, and the use of AI?
Yeah, I mean, it really depends on the use case. I mean, particularly I think data privacy and data security is always top of mind. It seems like every day we hear about a data breach or we hear about, compromises and this and that. I think on the other question there about AI, it really depends on the use case. Is it AI for, a cashback rewards program, or is it AI on consumer underwriting? And what's the use case there? As far as building more trust between the bank and the fintech specifically, a lot of times the proof is in the pudding. What's the track record of the program? If we on the bank side are doing due diligence on a program, what is being provided to us? What's the comfort level there? And that's the whole reason why we have a due diligence period. Even before we sign a contract, we also have ongoing reviews as well to understand what the fintech is using. I think we've seen, a number of different providers, whether it comes from data security, data privacy. There's a ton of different providers on the market. Some that we're comfortable with because we've seen them a number of times and we've already vetted them and we know what's out there. And then maybe there's a new provider out there that we've never seen before, which takes a little bit of extra due diligence and investigation before we say, yes, we're comfortable here. So I really think it just comes down to the level of transparency. And really, if you have a lot of transparency and we get comfortable with it, you're not going to have any issue from a trust standpoint.
Excellent. Rodrigo, what is Piermont's perspective and process and policies around this?
I think we take a similar stance. What Brian mentioned, I think, hits most points. It's a very important area for us to look at. It's a very important area for us to be on the same page with a given fintech. And making sure that all of those things are there as a fintech goes live, and also once a fintech is live and running a program is very important for us. So just broader perspective, I think it's the right way to do it for both the bank and the fintech.
Excellent. Yeah. So that partnership theme in every sense of the word continues to resonate strongly. Transparency, honesty, exchange of information from the get-go and ongoing. And so just an ongoing collaboration between fintechs and a deep-rooted partnership with their banks. Amazing. Thank you, guys. We've got time for potentially two. Let's dive into this one and see how the clock treats us. Rodrigo, to kick things off with yourself, our latest questions: as you scale and add more and more fintechs, how do you effectively monitor changes and updates? Some specific examples are disclosures and other materials, but the spirit seems to be more and more, how do you evolve with more and more fintechs and some of your oversight and compliance requirements for them?
Yeah, well, I think that the main thing is, at least from my perspective, having the right processes in place from the start. If you do not have the right set of processes, then as you scale and work with more fintechs, it becomes harder and harder to keep up with that volume. So making sure that all of that is structured correctly from the start and that it scales, I think is very important. And then, the other thing that matters is also building the right team, having the right team to support that scale and to support more fintech relationships. But if you have one without the other, it doesn't really work. So for us, especially as we're building this from the ground up, we have been focused on making sure that we don't create bottlenecks where we don't need them. And as I mentioned in a previous question, there are things that may require more of our attention that could take a little bit more time for us to look at and for us to approve or to feel comfortable with. But there are certain things that are more straightforward, right? Like making sure the right disclosures are there, making sure the right language is in like the FinTech's terms of service, as an example. All of those things, I think, can be done relatively quickly if you have the right process to support it from the start, and then build the right team to keep doing that efficiently.
Excellent.
Yeah, and the only thing that I would add to that is a little bit of almost like a single point of contact. I mean, that's a cliche term, but you don't want, depending on the scale or the size of the bank, you don't want 5 different people having their hands in disclosures, for instance, or an approval process on, various components. So if you are a smaller bank like, NBKC or Piermont, where you can control that as in a single point of contact, that'll make your life a lot easier in managing some of those changes, particularly in documents like terms and conditions or disclosures and anything that's consumer facing for that matter.
Excellent. One little piggyback off of that question set, and maybe an important caveat. I had heard both you folks mention teams, process, policies. The user had also added any plans to kind of automate this in the future. And so do you see yourselves with tools, machines, vendors, or anything such as that across the board for all these moving parts to maybe, remove friction or increase the ability to deliver those processes without the team and hiring and creation? And Brian, so I'd start with yourself, if you don't mind.
I would say we don't necessarily have any plans for automation, if you will. I think there are ways to automate that by simplification of processes. That's probably a better way to put automation. Disclosures don't just change themselves, but I do think that we have some processes that make it a lot easier to change stuff like disclosures and terms, or even just like marketing and advertising approvals or something like that. So automation, sure. I think it's more around process simplification is the way that I would put it.
Yeah, and I would agree with that. And I would say, like, in certain cases, there could be certain tools or like new technology that a bank can adopt to simplify those processes. And on our side, I think we're open to doing that and to continue evolving as new tools become available that we think fit that purpose. But talking about broader automation around something like this, I think can be tough without going into examples of exactly what you're automating. Certain things I think can be automated. Other things will always require human judgment and a person looking at something, provided input, like making sure that the things are done the right way. But I think a bank that's doing this should always strive to simplify processes and make things easier for the fintechs that it works with.
Awesome. Resounding resonance of ease, of friction, of guidance, of consultation. You can tell NBKC and yourselves in particular as individuals would be wonderful partners to help guide folks into maybe an ambiguous journey as they're launching into the unknown in most cases. We are coming up on time, and rather than squeeze us through one last question, I would just pose back to yourselves, if you could leave the audience here today comprised largely of sponsor bank peers such as yourselves and FinTech leadership or AML compliance folks, would there be any message or takeaway you'd love to leave them with before we do the closing remarks? And Brian, why don't we start with you?
Yeah, I think Ryan, you kind of summarized it earlier. I think that from the sponsor bank side, don't be afraid to get into the space if you're not here, or if you're in the space early on, to expand, right? And don't be afraid to do that. Obviously, understand the risks that come with it. Be able to document those risks. Have conversations with maybe regulators, but I would say at the same time, have conversations with peers in the space, and don't be afraid to reach out to someone at another bank who's here. Rodrigo and I talk around this space a lot, and we talk with other banks as well. And I think that you can get a lot of good information from your peers in the network. So don't be afraid if you're on the sponsor bank side, you have questions on how other banks are doing it or what the risks are, to reach out and shoot an email or set up a quick call and consult and communicate over that together.
Yeah, and I would add to that. I think for banks that are in this space, it's great to collaborate. The market is growing and it's very big. There's, I think, a lot for different banks like NBKC and Piermont to do and to work with the right fintechs on. And I would say something similar for folks in fintechs that are in the audience. Find ways to reach out to banks, to talk to us, to assess what's the right approach and what's the right model to launch a new product, or for companies that are already established but that are expanding into financial services, to find the right bank and the right overall model to do that. So I think we have been talking about collaboration a lot, and hopefully that's the message that some folks leave this webinar with.
Amazing. And hopefully Unit21 continues to provide the platform for that collaboration and this knowledge sharing. And so with that, thank you both. For the audience, thank you all for attending. That's all we've got time for today. If you'd like to speak to us further, submit further questions, please, again, Yash at Unit21, that is YASH at unit21.ai, and we'll do our best to get back to you as shortly as possible. And most importantly, we really want to thank you guys sincerely, Brian, Rodrigo, for taking the time out of your busy schedules to share your wisdom, your experience, and most of all, again, your time with us today. Thank you, guys.
Thanks for having us.
Thanks, everybody.
Awesome. We hope to see everyone on for our next webinar coming up next month on crypto and blockchain risk and compliance. And I hope everyone else got the same knowledge and insights that I got to take away from this. And I hope everyone has a wonderful day. We'll catch you guys very soon. Thank you all.